Hello everyone, Dave Landry here from DaveLandry.com. This is Trading Simplified. So what we talk about? Well, I think it's going to be kind of the same as it ever was, as long as the market's providing a plethora of lessons vis-a-vis the methodology. I think we need to continue to talk about that. Along those lines, if I can do it, so can you. Also want to do a market update with lessons. So as I've said, last several weeks, a lot of good people over at StockCharts doing market updates. I do a market in a minute update every morning. I also do about a 5-minute video every night for my clients. But more importantly, I think it's important to show you things such as bow ties and net price change, things that are possibly unfolding right now. And that'll make a little more sense in a few minutes. Again, I want to continue along the lines of if I could do it, so could you. Simplified trend following. Let the ebb and flow control the portfolio. Lately, I've become a little bit bearish, and people are calling me out on that, but I'm like, hey, I'm not dumping all my longs. In fact, I'll show you that in just a few minutes. But I'm putting on a short or two. And again, we'll get to that in 1 second. I want to follow up on a couple of mystery charts, and I want to continue my discussion on profit centers. This week, talk a little bit about opening gap reversals, Russian dolls, crypto, and specifically the alt coins. By the way, I do take requests. If there's something you want me to cover, feel free to contact me through this link here, davelandry.com/contact, or if you have some other questions. If you want the slides from this presentation, all 3 of my books for free, and a plethora of other stuff, go to davelandry.com/stockcharts. I'll give you enough to keep you busy for a long time. So let's just do a really brief market update with some lessons. I want to follow up on what I've been talking about over the last several weeks. The market will do the most obvious thing in the most unobvious manner. It also do what it has to do to frustrate the most. And I got those axioms from Landry, and she said she probably got them off the floor somewhere. So she's very modest. She didn't claim original thought on that, even though it might have been. Anyway, you could see, looking at the S&P 500, if you go back to the left side of the chart, the low is greater than the 30-day EMA, which means we have upside Landry light. And by the way, these indicators are on ACP. My plugin is free. Free. All you have to do is like this video if you're watching it on YouTube. And ideally, leave a comment below if you do like it. If you don't like it, go have no fun somewhere else. I'm half kidding. But notice that we did cross back over the moving average. Now, if the price intersects the moving average, doesn't have to close below it, the Landry light goes to 0, and that's illustrated below. And then over here, once again, we had a little kiss of that moving average. We could actually use that to our advantage, and I'll talk about that in a few minutes. Here you can see we went red for a day as the high was lower than the moving average. In this case, I'm using a 30-day EMA. And then you can see the lows, once again, higher than the moving average. So that gives us upside Landry light, little kiss right here, but we never go below the moving average, meaning that the highs are never below the moving average, so it did not go red. And then the low, once again, greater than the moving average here, and that gives us the green upside Landry light. So we take a look at Landry proper order. That's just simply the 10-day simple is greater than 20-day exponential, and the 20-day exponential is greater than the 30-day exponential moving average. And you can see that's illustrated below. Notice that when the moving averages begin to cross over, it turns yellow. And in this particular case, it turned green once again, meaning that they went right back to proper uptrend order. Now, I'm not a huge fan of indicators. In fact, the only indicator I really use is the moving averages. I will also use volatility, but that's not a measurement of price momentum. That's just simply so I know how volatile the instrument is. And all of that is in the ACP plugin module, by the way. So if you're just looking at all of these things, the market is okay. But one thing that's very concerning, and this is probably the first thing you should ever do when it comes to technical analysis, is look at the net price change. Where's the price today? And go back in time and see how far you can go intersecting prices. And you can see that we haven't made a whole lot of progress in a couple of months in this market. It always amazes me. It's that people who have been trading for a while will send me a chart they really like for some particular reason, and I'll look at the chart and I'll say, well, that's nice, but the net price change hasn't moved in about a month or so. So this particular market that you're looking at might be losing a little bit of steam. Now let's take a look at the NASDAQ. A little bit different picture there, looking much worse than the S&P 500. You can see we're in downtrend proper order. and the bow tie moving averages. They did try to cross back over, you can see, and that's where we turned yellow. And then now we're once again below the moving averages, and the moving averages have crossed back over to the downside. So in other words, we're in downtrend proper order, and that is illustrated below. Notice that the lows were greater than the 30 EMA back here, meaning that we're in uptrend proper order. We had one little kiss here, goes back to 0. And up here, lows are well above the 30-day EMA, so it turns back green. And then red here. So notice the prices intersect the moving average. So there's no Landry light. There is the one day where the low is greater than the moving average if you look carefully. And then you can see once again the highs are less than the moving average, so there's downside Landry light. So if you just look down here, you'd say, okay, things aren't doing so well, but I always look at a blank chart first. So the other thing you could do is just look at where the market is and look at where it was and draw you a big blue arrow on the chart. So NASDAQ looks like it's rolled over in here. Not the end of the world. People get mad at me when I get bearish. I just call them as I see them. Believe in what you see and not in what you believe, right? So if it goes straight back up, go straight back up. So let's take a look at the Russell 2000. As you can see, the moving averages were in uptrend proper order for a long, long time. And the market was headed higher. And now you can see the market, the highs of the market that is, are below the 30-day EMA. So we have some downside Landry light. And also these moving averages have begun to cross over. So this indicator will be yellow now, and it will turn red soon if the price stays below the moving averages. So maybe we need to start calling the Russell the Rusty based on this possible turnover in the moving averages. Plus, it's also kind of rolled over. Now, the semis, kind of an interesting situation here, kind of taking their own sweet time in their rollover. You can see we had uptrend proper order for a long, long time. A little bit of yellow, and then we went back to uptrend proper order. But for the most part, the market is headed higher for a long, long time. But now it looks like it's trying to roll over. It certainly lost some steam in here. We had a bow tie down here. Market pulls back a little bit. The obvious move would be for a move lower, but what has it done so far? A little bit of fake out and head higher. And as you can see, the moving averages went to red, back to yellow, meaning that they're intersecting. And now they're actually back to green, believe it or not. But it still looks like an obvious rollover to me. But so far, the market doesn't care what I think. At the least, look at the net price change, 30.31. Go back in time, you can see that we were at 30.31 in early 2021. So not a whole lot of forward progress for 2021 in the semis. Now, biotech, a little bit more obvious. As you can see, bow tie moving averages came together, went from uptrend proper order to downtrend proper order over a short period of time, given the appearance of a bow tie and the moving averages. A little bit of a pullback. We had a sell signal here. Market pulls back again and then begins to sell off one more time. So obvious uptrend, kind of an obvious downtrend in here, kind of textbook in nature as far as the bow tie is concerned. And it's kind of a Tarzan market, up good and down bad. And these are my favorite markets where it's obvious and the action is obvious. It does the obvious thing. Now let's talk about some mystery charts and the methodology in action. And I believe if I can do it, so can you. What I'm doing is not rocket science, and that's why I trademarked Trading Simplified. So here's a mystery chart follow-up. This is Crowdstrike from a few weeks ago. You can see, based on the Landry proper order, it's in an uptrend because the 10 is greater than the 20 and the 20 is greater than the 30. But then if you look at the chart, and again, always look at the chart first before adding any indicators, you can see that it has rolled over, even though the proper order has been mostly green for that period. Sometimes it takes the moving averages a little while to catch up. By the way, one thing I like about the Landry light is being priced based, and you're not waiting for a moving average crossing. Sometimes it's a little bit quicker, but obviously you might get a little bit more whipsaw with a filter like that. And I'll show you my favorite way to trade the Landry light in just a few minutes. Now, even though we've been mostly green, you can see that each new high is a new high with a little bit of less vigor. Classical technical analysis would call that 3 drives to a high. I'm not a huge fan of that pattern, but it's kind of interesting. It's sort of the same thing I say about my own stuff. It's like every top will probably have a 3 drives to a high in it, but not every 3 drives to a high will be a top. Just like every top will have a bow tie, Landry light, or one of my other transitional type of indicators or patterns or setups, but not every one of those setups or indicators will be a top. So you can see we turn back to red here, nice little bow tie crossing, and then market pulls back a little bit, and let's see what happens. And so far, nice little sell-off in Crowdstrike. But notice that it did kind of fake out to the upside first. And again, the market will often do the obvious in the most unobvious manner. It's going to do what it has to do to punish the most amount of people. GH, another mystery chart from a couple of weeks back. You can see that longer-term uptrend, as evidenced by the bow tie moving averages, proper order, looking pretty good in here. But then notice that it makes a new high, and that high is greater than the prior high, but it looks like it's lost a little bit of steam. We've got the bow tie moving averages begin to come together and cross, going from uptrend proper order green to yellow to red, meaning downtrend proper order. And you can see the market has rolled over, even if you're not using any indicators whatsoever. And again, we go from yellow back to red. A little bit of pullback in here. And the top one was the recommendation, 138, 153, 123, entry, protective stop, and initial profit target, respectively. So that's what that looks like on the chart. So you can see rallied up a little bit, sold off nicely, triggered, and now it's going back up. I know, a guru has never showed you a losing trade, right? But so far, this has been a loser for us. You can see it's down here in the portfolio, losing a little money. This was another short, though, from last week, and so far it's worked out, knock on wood. It's hit the initial profit target, and we're holding on. A lot harder to trend follow, by the way, on the short side than the long side, unless we're getting to a rip-roaring bear market. But we're going to hang on to the second loaf of that PDD and see what happens, good, bad, or indifferent. And by the way, follow through on your plan and not micromanaging yourself. Very, very important. Get a lot of emails lately about people micromanaging, and we can get into deep dives on psychology on that. But the bottom line is, and I know I'm guilty too, just do it, or just don't do it, I should say, in this particular case. Now, let's talk about ebb and flow in the portfolio. Like I said earlier, somebody pointed out that, hey, you get all bearish, and that's when I make money because some of the best opportunities, the market keeps going higher. And that is true. In fact, my methodology in and of itself is wait until the market pulls back a little bit and then look to get in on the resumption of that pullback. And it's okay to get cautious. Just don't flip a switch like I'm a bull, I'm a bear, and go one way or the other, but rather let the ebb and flow control your portfolio. And I think that's what a lot of people get tripped up. They're like, well, he's bearish. It's like, yeah, but the market's still going up, so I'm not going to fight it. I'm, as they call me, a trend following moron. Anyway, you can see the portfolio from a couple of weeks back. We had, on this particular day, we had all longs. One is long, -1 is short. And then in the Landry list, which is my personal watch list, I also publish it every night as part of my trading service, there were only 2 potential longs. Those longs were in the oil and gas, so not a whole lot to get excited about as far as the overall market is concerned, and the rest were shorts coming in. Now, fast forward a week, and you could see that we had 4 longs and 1 short, and notice that we got knocked out of 2 of those longs. Did I just say short? 8th grade board humor there, right? Now, fast forward to service coming into today, and you can see we have 2 shorts in here, and then we have 1, 2, 3, 4 longs, and then I did not personally take this one because of the way it triggered. I used a little discretion on that, but I am looking to get long on a retrigger. Mechanically, and this is how I show the portfolio every day, it did trigger, so I do have to count it as, so far, a losing trade. Now, the reason I don't bail on all my longs, and this doesn't always work, but lately I've been a little bearish, right? But let's take a look at the longs in the portfolio. That's ASO, nice little move, percentage-wise, that's huge, okay? Take a look at APG. A decent move there, much better than a poke in the eye. CPE, slightly higher. Again, better than a poke in the eye. And then ARLP, slightly higher. Now, do stocks always go up, even if I'm a little bearish? No. Am I interviewing myself? Yes. All right, let's shift gears here and get to trading a little bit more complex. So let's go to trading slightly more advanced with Dave Landry. Lately in my weekend charts, which I do every Thursday night, check my website on Thursdays, davelandry.com, to register. And you could also go to davelandry.com/webinar. If the date is old on that, by the way, it'll still bring you to the current show. So you might register for a show a couple weeks old, but it'll bring you to the current show. So lately I've been talking a lot about the profit centers and its ancillary profitable techniques, profitable being a key word in that sentence, ideally non-correlated to the core methodology or in non-correlated markets. So the idea is you're making money in a core methodology and you're also able to make a little money in some of these side markets or with possibly some ancillary methods. So one thing that I like is Russian dolls, and then I also like them when they combine with an opening gap reversal, or ogres as one of my clients started to call them, and it caught on. So the rules for the ogre is that the stock or other market is in a strong uptrend. The stock is at or near all-time highs, at least multi-year highs, or ideally set up as a pullback or TKO. And that's the Russian doll aspect. You have a bigger picture pattern working for you, sort of the wind at your back. The stock must have a significant gap lower based on its volatility. I actually scanned for at least 5% gaps. I'll need to check with StockCharts.com to see how to do it with their platform. So you want to look to go long on an intraday breakout. You could also, depends on how it sets up, possibly look to go long just below the prior day's high. And that'll kind of help you to front run the pullback players who are looking to get long above that high. Now, your initial profit target / protective stop should be adjusted based on the stock's volatility. Ideally, you want to try to survive the low of the day. Now, Russian dolls, basically you're looking for a pattern within a pattern. That's why I call it Russian dolls, for lack of a better name. The stock or other market must be set up for a potential swing to intermediate term move. In other words, the same exact thing as my core methodology. You want to look to take an intraday trade on an aggressive entry. And as I said earlier, near the prior day's high, depending on the setup, possibly an intraday breakout, or ideally if an opening gap reversal happens. I do like to watch 15-minute bars. I found that with the 5-minute bars, I was getting caught up in the noise on these. And remember, this is not the bread and butter. This is an ancillary type of thing. We're doing it, and I hate to use the word day trade, but it's more of an intraday trade. We want to get in, and we want to hold on as long as possible. And you don't have to watch every tick. You could set a stop entry. A lot of times I'll set a stop entry on these, go about my life, do one of these recordings like I'm doing now. I get a little zing, and then I go take action on the chart. You want to use a wide enough stop to help ride an intraday trend all day. And then you're going to take partial profits at the entry plus the entry minus the stop. In other words, it's a mini version of the core methodology. If the initial profit target is hit, continue to trail your stops on the remainder with an MOC, market on close, that is, exit. Now, that'll make a lot more sense as I walk you through an example. This is a Russian doll type example. We come into the day, and this is a nice longer term uptrend. It's an accelerating trend. It's also persisting in its trend higher, meaning that you could draw a line through most of the bars. It pulls back a little bit in here, and then you can see that it's on my Landry lists. These are the list of stocks coming into the day. Now let's take a look at what happened. You can see it gaps lower, and the idea is to buy with the hopes that that market reverses and heads higher. And in this particular case, it did. Let's take a look at that intraday. So you can see it gap lower and then made a little bit of a reversal and didn't jump in right away. I decided to put an entry above that range and kind of sell it off for a little while. I forgot about it, and then all of a sudden I get a zing when I get triggered in. Now, I went with a fairly small share size, and this is based on a 100K account. I usually don't like to lose much more than 0.5%. I don't like to lose anything, but I don't want to risk more than 0.5% in a day trade. So this is about a 0.4% risk on this particular trade because I was looking for 1 point for the initial profit target. Stop down here, 1 point. Initial profit target up here, 1 point. And let's take a look at what happened. Now this was kind of a textbook example. They don't always work this well, obviously, but it rallied up. I was able to get that initial profit target out, and then I rode it until the end of the day. Was not stopped out via my automatic trailing stop, and then I exited on the close. So the question is, does your methodology work in crypto? And I get asked about every market in the world. And the answer is yes. It's trend following. As we say in Fargo, you betcha. Now, keep in mind that everything works better with trend. That's a secret sauce when it comes to the market. And the other thing to realize is that all methodologies can be categorized and will have certain respective nuances. So there's certain nuances to longer term trend following. You're going to be very inaccurate. You're going to have abysmal drawdowns, but you're absolutely going to print money in a wild and crazy trending markets. And that's why the turtles did so well, became so rich and famous, and then most of them have gone by the wayside. I wouldn't ever be Schadenfreude, but I think they were in the right place at the right time. The market was breaking out and following through. By the way, as I said before, this is my tool cart. At least this is when it was clean. Somebody from Italy's like, that's too much mess. And I'm like, that's clean. I wish it was this clean right now. So I use a lot of tools for a lot of different jobs. And I kind of have the same mentality when it comes to the stock market. Also, my father would always say, if something helps your life out, then get it. And if it's something educational wise that makes you smarter, then by all means get it. Or if it pays for itself, don't be penny wise and pound foolish. So check back within the next couple of weeks for some of these altcoins I'm going to show you. Now, as I've said quite a bit, post-COVID, I've been real excited to do a lot of things that I've been meaning to do for a long, long time. And one of those things was the altcoins. So a few months back, I sat down and I got all the altcoins up and running, and I began to trade them fairly aggressively. Now, initially, I think my era was that I went in and tried to figure out what each one of these coins did or was and whether it made sense or not. It reminded me of many, many years ago. I used to spend a sizable portion of the weekend in the library studying value line. I know you'll probably want to party with me. And trying to figure out what a company does and their earnings and fundamentals and all this other stuff and debt. And then I realized you just have to buy the ones that go up and sell the ones that go down. So essentially that's what I'm doing with altcoin. So if you get a trend follow with altcoin, pullbacks, TKOs, generic pullbacks, Landry-like pullbacks, that's a great place to start. I do some relative strength trading and breakouts. I'm not a big breakout trading fan, but when breakouts work, they're great. But that's only in runaway momentum markets. So let's take a look at a few of these altcoins. You can see nice little Landry light here. We had a breakout. And again, breakouts work when markets are breaking out and following through. Nice little uptrend here, as evidenced by the Landry light, a little bit of a pullback. And then nice little resumption of the uptrend. Now, by the way, tread lightly in these things. I mean, it's probably all BS, but who cares? It's like this one guy sent this newsletter out, and by accident I got on, and he's like, Bitcoin, it's crap, it's garbage, blah, 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 blah. And he would talk about what crap it was. And that was when it was at 4,000, and now it's 55,000. So what? If it's going up, trade it. Now, let's take a look at sand. You can see nice little breakout here. Nice little trend higher. Landry light, got a little bit of a pullback. Little kiss of the moving average. So that completes a Landry light pattern. Entries here. Nice little trend higher. Another pullback. And then a nice little resumption of the trend there. This is SC. You can see nice accelerated trend here. Landry light pullback. Entry would be here. Nice little resumption of the uptrend. Take a look at StoreJ. You can see nice accelerated uptrend. Bit of a TKO down to the 30 EMA. In other words, a Landry light pullback. Now let's take a look at what happened afterwards. That was way back here. And you could see after a slow start, it blasted higher. BAT, another one. What do they do? I don't know. Nice little pullback, nice little resumption of trend. Here's Ethereum, and this is in the ACP platform. So you could see Landry light back here. This is Ethereum. A little bit of a pullback to the moving average, creating a Landry light pullback almost, okay? And this is why I don't go by a stringent mechanical type of setup. I like to use a little discretion, but it's also a TKO. But you can see that the Landry light did not turn red or go flat because the high did not go below the moving average. And then the price actually didn't cross the moving average either. And here we have another TKO, and so far it's been an okay uptrend since. So that's all my time for this week. If you need some follow-up information, see these links below. And I want to thank all you guys and girls for watching, and may the trend be with you.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.